Shocks here. How are you doing, guys? Today we want to talk about why your order blocks are failing and why you are choosing the order blocks that are failing and how to choose the order blocks that do not fail or order blocks that give you a higher probability of winning. So we are going to be looking at cycles and we are going to be using that to our advantage in choosing order blocks. And I'm going to explain how cycles work in Forex and how we can take advantage of that to choose our order blocks and increase our odds of winning in each and every trade that we are going to be taking. So first of all, let's kind of understand how price moves. So if you see something like this, you will know that after each and every move like this, you are more likely to get a move like this. So in simple terms, what we are saying is price moves in V and A forms like this. So whenever you have this left side, you should be expecting this right side. And whenever you have the right side, you should be expecting the left side. So what we are saying is simple. When you are looking at this, what should come to your mind is the other side and how you can navigate the two, and be sure not to confuse the two when you are trading or analyzing your markets or looking for your order blocks. So let's look at this one. Let's say we have order blocks in this area. Let's just change the color here so that you can see. Let's say these are our order blocks, right? So these order blocks are only valid when we are trading on this left side of the what of the cycle. On this right side of the cycle, we kind of forget what everything that has happened here, and our focus would be to mitigate every move that was happened here. And if you look closely, you will see that the moves that we are going to get on this side are more or less mirror moves of the moves that would have happened on this left side. Let me show you that on the charts, and we'll come back and explain what we are saying. So if you look at this, you can clearly see that we have this move, right? And we also have this move, and we also have the mirror move of this one, of this, and we also have this one that mirrors these moves. So if you look closely, you will see that we have look at this move, right? And the move that is going to happen on the other side is more or less the same to the move that would have happened on the previous cycle that we're talking about. So we can conclude that price moves in cycles, right? It moves in cycles or mirror cycles that you can clearly identify on your chart. So if you know this, and if you can see this as I'm drawing here, you can see that we have this mirror of this move, and after this we are having these mirror images. So if you have this, how then are you going to be trading or choosing order blocks that work almost every time to your advantage on this particular move? So what I'm going to do here is simple. We are going to mark order blocks on this downtrend, and we mark order blocks on this uptrend, and explain what order blocks are going to be working for you and what are not going to work for you. So if we have these order blocks, you can clearly see that these are bearish order blocks that are working as price is going down, right? That are working as price is going down. But I want you to see that when we start going up, right there, after breaking this order block, right, we start going up, what do you see? You can clearly see that there are some people who extend these order blocks like this and try to get like sales at this particular zone. This is one of the reasons why some order blocks are not working, because you are choosing order blocks on the wrong side of the cycle. The cycle ends there, and we start another cycle here. If you want to identify or to increase your chances of your order blocks working out, you need to understand that you need to be trading from peak to peak, right? As soon as price gets to the peak, that's when you can take counter trend order blocks or counter trend. In this case, what are we doing? We're only going to be buying and are not going to consider order blocks that are on the other side. So remember, we are going to ignore everything on this side, and we're just only going to buy until price breaks a low and changes direction. In this case, we are not going to be using these order blocks. You see, we were using these order blocks to buy when price was what? When price was buying in this what? In this area here. So as soon as this trend line is taken out, we will not be taking these buys. You see the buy in this area. This looks like a very good buy or a very good setup for someone who does not understand market structure. So this is not a move. This is a what? This is a retracement of price from what? From order blocks from previous cycle. So what you need to do is, in this case, it just bounced off this order block to bounce from the what? From the breaker in this what? In this area right here. So when price falls down, what are you going to do? You are just going to consider order blocks on the bearish side of the move, right? Until you get to the peak or until you get to where this cycle would have started from. So in this case, this cycle started from this yellow zone here. When price started here, you will stop selling when price gets here and wait for what? For price to start a new trend or a new cycle. In this case, we started this one to mitigate this one. So it means that if we have one leg, we will most definitely have another leg kind of to mitigate what is happening. And look at this move here that happened. This is what? This is Euro USD on what? On TIOmarkets. And remember guys, and if you are looking for a broker to trade with, look no further than TIOmarkets. The links to register and trade with TIOmarkets are in the description down below. I recommend this broker. I've been using it for weeks now and I don't have any complaints pertaining using it. So if you're looking for a very good broker, you can consider joining TIOmarkets and we can trade together as we go. So what I was saying here is we have this move here. This, if you see moves like this, the impulses like this in a market, this liquidity void. So this is a liquidity void. So you are most likely to see price filling this gap with a wave of price that will come on the other side of the what? On the other side of the cycle. So this is a void and you know that price will fill that void. So until we get to this point, we are going to be buying as soon as market structure allows. But you are not going to be selling this at this particular zone. Why? Because we are going up from here. If you mark it like this, you can clearly see that these order blocks are going what? Are going up as we break what? As we break structures, we go up. So the only sensible way is to what? Is to buy. If you try to sell in this particular zone, it's like trying to catch a falling knife. You get hit. So this is what you don't want to do. You want to follow the cycle. Some people say follow the trend, but here we are going to follow the cycle. And what is the cycle? We have the V cycle and the A cycle. What we want to do is follow the cycle. As soon as we are in this direction, we are not worried of what is happening here. What is happening on the left side should just inform you on what price needs to do on the objectives of price. And in this case, the objectives of price is to fill in this what? This liquidity gap or this liquidity void that you see and go up. And as you see, as soon as it filled that gap, it started going down on another cycle. So what I'm saying is you are not going to be trading these order blocks in this area. You see these order blocks here. Some are going to be violated and some are going to be respected. But if you want to stake the odds of winning each and every trade that you take, you need to be taking the what? The order blocks in this what? In this area and in the right side of the what? In the right side of the cycle, as you are seeing, as I'm doing here. So what I mean is you need to avoid trading sell here. Why? Because the cycle has shifted. The cycle has shifted at this particular what? At this particular angle here. When price shifted from what? From a downtrend here to an uptrend by breaking of this what? Breaking of this high, which is change of character. And what you need to see is to see price going up from the order blocks on the right side of that particular what? Of that particular cycle, as you can see. So this is how price is doing cycle, cycle, cycle. And as you get to this particular point, you see price changes again and we have a new cycle here and price is doing that. And you see what price has done here. What I'm expecting here is to see a new cycle of price that will what? That will compensate or that will mitigate what has happened here. So we can say this is a cycle of price and we are expecting the other leg, but the other side is not forced. So what you are going to do is you're going to wait for price to actually give you a change of character here where it breaks and starts the other cycle. And you have to understand that when that happens, there is no way or no reason you are going to be trying to buy from this order block. This is a cycle that has happened, and when the new cycle comes, this order block is not valid. You are not going to be trading this one. This one can be used by price as a way to what, to give you a retracement back to the what, to the order block that would be maybe in this area, so that you can buy to this area and drop. So if you are smart enough, if you're a smart trader, or if you're a trader that wants to make money, there's no reason for you to be buying at this particular order block, but you just know that price might bounce off this order block as a retracement to go to this one, to this particular order block that you then take from this order block to what, to maybe this where the cycle would have started from. So let's just look at another example and see if we can get the same cycles that we are talking about on other pairs. So here we are looking at what, we are looking at USDJPY, and you can clearly see that we have the same cycle where we have a move up and a move what, and a move down. So this is an A setup. So when you want to see price bouncing off, for example, this zone here, you see that this is just a retracement back to what, to an order block in this area that you can then take, and you are not going to be fixated on this order block to buy from this particular order block and see results. And this goes the same for maybe order blocks in this area where you are going to see price retracing from here and going to this particular zone and things like that. And you are going to do the same for these particular order blocks where you see price just bouncing off this order block, goes here and what, retraces. So you need to avoid these order blocks on the left side of the cycle and go with the right side of the cycle as price goes. So you're going to be worried about what is happening on this side and be accountable of what is happening with these order blocks as far as the retracements are concerned. So this is what I wanted to show you. I hope you are going to be choosing order blocks the right way this time. I will see you in the next video. Cheers.